Monica Long, the president of Apple, discusses the prognosis for cryptocurrency markets and indicates that the business is likely to create a stablecoin based on the US dollar later this year. Exactly what are we beginning to look at in this situation? Are some of the more established businesses beginning to show interest in entering this market through the use of exchange-traded funds ETFs? Through the use of exchange-traded funds ETFs and the tokenization of assets that exist in the real world, I believe that the answer is yes, without a doubt. Therefore, this is something that we are observing from our custody, our customer base, and the fact that large institutions such as Stock-in are leading the way in this regard to tokenize various securities assets such as bonds and share prices. There was a reference of the EFTF. From your perspective, how significant do you believe that will be? Will it be as significant as Bitcoin? Considering that it is a smaller cryptocurrency, it is still the second largest cryptocurrency, but it has a smaller market cap, and it is possible that the retail investor base and even the institutional investor base do not understand it, as well as these other two groups. Increasing and extending market knowledge and education of what is happening in the cryptocurrency market is something that I believe is happening. As a result, I believe that there will be an increase in the number of stories and narratives that revolve around the activity ecosystem that is being established on top of Ethereum. That way, we can sit tight and observe what transpires. In light of the fact that you made a significant statement earlier this year concerning a Ripple stablecoin, I would like to shift my focus away from markets and Ripple. How come? Stablecoins denominated in US dollars constitute a significant market. On the whole, stablecoins have a market cap of approximately $160 billion as of today. According to the forecasts, this market is expected to reach approximately $3 trillion within the next 4 to 5 years. And I believe that is due to a few different causes. A simple demand to hold United States dollars, as well as quick access to United States dollars in different regions of the world for the purpose of making payments, has been the foundation of our company for a considerable amount of time. Consequently, we are entering this industry since we have observed a demand from our clients, which are various sorts of financial institutions, who are interested in utilizing blockchain technology for the purpose of making global payments more efficient. I would like to accomplish this by utilizing a Ripple that is stable in the United States currency. It is important to note that we have a history of being a highly trusted, compliant, and secure operator in the corporate arena that spans over 10 years. Because of this, I believe that we are an excellent contender to offer a United States dollar that is stable to the market. This is a question that a lot of people desire to interact with us. How soon do you anticipate putting it into action? You should know that we are currently working on it, and you can anticipate some additional updates from us later on in this year. If it is likely that it will be launched this year, then it is likely that you have already started purchasing the assets to support it at the time as well. We are working on all of the things that need to be done in order to get a product like this to market, so everything from the banking partnerships to the distribution relationships to compliance is being worked on. Compliance is the most important issue for us, and we are making sure that we are adhering to the regulations and rules that are specific to each jurisdiction, possessing the appropriate licensing, and maintaining a direct connection between the stablecoin and XRP if you have a stablecoin. It is obvious that you should incorporate XRP into some of your products in order to facilitate international trade. Does the inclusion of XRP in this combination make sense? Undoubtedly, in order to provide our consumers with payment services, we make use of a variety of assets, which includes both stablecoins and XRP. The use case for XRP in particular is as it was envisioned by the original creators of the ledger and of XRP, which is as a bridge asset for the long tail of currency pairs. This is the use case that XRP is intended to fulfill. Additionally, we are discussing the tokenization of multiple other categories of assets. In the future, when you will have many different kinds of assets tokenized on the blockchain, it will be essential to have a particularly efficient intermediary bridge asset that can make any pair of assets liquid. I have one last question for you, Monica, and it is really brief. When we consider the current state of the exchange-traded fund ETF ecosystem, we have a possibility that Ether will be approved. Are there any exchange-traded funds ETFs that you anticipate launching for XRP? In my opinion, it would make a great deal of sense. Only XRP and Bitcoin have regulatory clarity on their status in the United States, if you have any reason to think about it. By market capitalization, XRP has been one of the top 10 crypto assets, and if you look at the daily traded volume, it is roughly in the top 5. That, in my opinion, would be a very reasonable explanation. And yes, today we are going to talk about the future of XRP, and then we are going to collect some news. In order to contribute to the modernization of markets in the United States, the organization can improve the effectiveness and transparency of blockchains. In the previous month, the committee made history by introducing complete legislation regarding the framework of the digital asset market across the House floor with significant backing from both parties. This comes on the heels of strong support from both parties for the repeal of Staff Accounting Bulletin 121, which would allow regulated financial institutions to have custody of digital assets. I am overjoyed that the subcommittee's attention today will now transition to other matters that are linked to digital assets, despite the fact that our work with digital assets is not even close to being finished. For example, one of these areas that I am very interested in entering today is the tokenization of assets that exist in the real world. It is possible that some people will consider tokenization to be nothing more than an extension of the discussion that we have been having in this committee for more than a year on digital assets. This is due to the fact that tokenizing real-world assets requires the use of blockchains or distributed ledger technology. Nevertheless, it is worthy of its own separate discussion and prioritization, among other things. Despite the fact that blockchain networks are typically used for the issuance and management of digital assets, tokenization has the potential to put traditional finance, quote, on-chain. To put this in a different context, tokenization has the potential to help modernize markets in the United States by leveraging the efficiency and transparency which blockchains provide. Certain aspects of our capital markets are plagued by issues such as prices that are inflated, liquidity that is stranded, markets that are compartmentalized, and high barriers to entry. It should come as no surprise that some of these constraints are also present in the banking system. For example, it may take some time to transfer funds or reconcile ledgers between two separate financial organizations. Tokenization, with the assistance of blockchain technology, has the potential to automate a number of these essential activities that are involved in a financial transaction. This will result in a more streamlined settlement process, reduced expenses, and a reduction in agency fees, which is an equally vital component that will benefit both customers and financial services. Blockchains are able to provide a safe and transparent record of ownership for tokenized assets. This decreases the chance of fraud and errors, as well as increasing confidence and visibility into transactions. Blockchains are characterized by their immutability, transparency, and compliance programming. Many different markets have the potential to benefit from these advantages. There have been some encouraging developments in the manner in which states have adapted to the recent revisions to the Uniform Commercial Code. This contains recently revised guidelines for the conduct of business transactions involving digital assets. Unfortunately, we have also witnessed authorities stifle the advancement of creative ideas through the use of guidelines. For example, before running any pilot program that involves blockchain technology, such as the concept of tokenizing deposits, financial institutions are now required to seek a non-objection or some other type of approval process from a federal regulator. This is the case for any pilot program that involves blockchain technology. As is the case with the evaluation of any other operating system enhancement in a financial institution, the private sector should not be required to seek the approval of a financial regulator before investigating the most recent technological advancements in search of a potential method to save money for both the company and its customers and to have a product that is more efficient. For the purpose of bringing our markets into the contemporary era, we need to make sure that our regulators are open to this kind of innovation. As of today, we are hearing from individuals who are actively utilizing tokenization in order to better enhance both our banking system and our capital markets. I am really happy to learn more about the advancements that our witnesses are actively working on both in the United States and in other countries. They are helping usher in the next age of financial services in the United States, and I know that they are doing this. I have high hopes that we will be able to make use of this hearing to gain an understanding of the circumstances in which the utilization